The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look at the German DAX like we usually do. As you can see, it's had a big explosive move to the upside. Don't know why, but it had a huge gap. Of course, we had a big gap in the our indices too, being up almost. Well, we're up 900 points, I believe, one time in the Dow Jones Industrial. I'll cover that in just a little bit. But first of all, we've had a request to take a look at the TBT because this is one that we follow for the folks that trade that ETF for the Treasury bonds. And I believe the Treasury bonds, they backed off a little bit from where we thought the high would be last night. We were posting at 182.16. It's dropped about two handles to that level. But as you can see here on the TBT, back here in March, we had that monster spike, record volume. That was the bottom day, and then you had the rally up and then the pullback here, setting right at the 78% level. So if you're going to be buying it here, your risk is just under $15, is my opinion, if you wanted to do that. It's not a bad trade. It's a very, very low-risk trade. It has potential if it does turn, but the $64 question is, will it turn? We'll find that out probably in a few days. I do not like the ETFs, folks. I have never traded an ETF other than in fact, I think I did the one of those SLVs or GDXs, GLDs once in a while, but I basically am looking at the futures. Also, pay close attention today if you're a gold trader. The 78% retracement of this move back from 1702 came in at 1685. We've been as high as 1678 is what I saw a little earlier. So kind of keep an eye on that because it's doing the exact opposite of what is going on to the question, of whether it's going to turn at that level or not. Now, there was one other comment that I wanted to make, and that was about the pigs, the little hoggies. Let's take a look here. They were limited down 4 of the last 6 days, folks, which is really unusual. And you can see what's happening here. With this, you can see that they're down to prices approaching where we were in 2009, 2016. Remember, the last year and a half, they've had this terrible Asian flu for the hogs over there, and look at the price of hogs. They've dropped in half, folks, from 90 to 40. I mean, that's just that's why when you read the news, gosh darn, and it's the same. I believe it's the same thing that's going on with this virus thing. But who knows? But anyway, that's why being a technician gives you a little bit of advantage, because if you're looking at the price of the chart, if prices are strong, the people are buying. If prices are weak, people are selling. And remember, the open interest is dropping in both gold and silver. This is not a good sign. I mean, it can go up a lot more, but over a long period of time, that's not going to be a good thing to look at. Usually, I mean, that's always been the case in commodities, because for every buyer, you're supposed to have a seller. Sometimes that's not going to happen. So if you have any questions this morning, it's 877-927-6648. All right, let's take a quick look at the stock market, where we've been here over the past. This is a 4-hour chart covering the last month, pretty much. Get this up here so we folks can take a look at it. We topped up there at 29,000 and change. We bottomed down here 11,000 points lower in the Dow at 18,100. You can see the big 3 drive to a bottom pattern. That was on March the 22nd. That you'll never guess what that was, folks. That was the old equinox. We had several people telling us that was probability of a good bottom, and we did. We had a pretty good bottom. You'll see that it rallied up into the 26th of a 4-day rally up into the a 382 retracement, and I'll highlight that in just a minute. And then over the last several days, we backed off. Nice little ABCD here on April the 2nd, and then we rallied up last night. We made a 61% retracement there at 21,820, and that was the 61% retracement. It can go easily higher than that, but if you look at it really closely, you can see the nice little ABCD over the last 3 days. Remember, this is a 4-hour chart, folks, so each one of those bars is 4 hours, so it's a substantial bar. Someone's Larry, opportunity comment when you lost everything out. You came in great. He said, "Oh, Ruby's asking a question about how I lost the money." I mean, I've had a couple of them. I mean, I had the first one was in. I'll do them one at a time if you like. There's been two. One was the Drexel, the bankruptcy. I have no control over that. But anyway, in 70, started in about 67. I started trading pretty actively, and started with a few $1,000s. Ran it up quite a bit, just 7 figures. And then in July, my birthday of 73, I had hit an all-time high at about 1.2 million, and I'd spent a lot of money on the way up too. But then I made some stupid things. I thought I was invincible. I mean, I was oh dear, I had to learn every lesson in the world, and then over the preceding next 9 months up until October of 74, I gave it all back plus $2,700, and it never bothered me because I was young and I knew if I could make it once, I could do it again. And what I did, that's my learning process. It was actually a really really big thing. When I was in Beverly Hills, that was all green, Ruby. That was the easiest money in the world. I started at Drexel in '76, in August of '76, and I started buying gold. I ended up with about 75 clients, and it was run like a hedge fund. That we didn't have hedge funds back in those days, and I was literally long gold and silver. Even when I was wrong for a short period of time, the market would bail me out. But I happened to be there at the right time. It's not, folks, you don't measure a man by how they are at the top. You measure the man at the bottom and how much he bounces when he gets up. Like Mike Tyson says, everybody knows something until they get hit in the face, and that's pretty much what it's all about. You have to just buckle up. Those of you that try this, just don't give up. You can do it, but you've got to try. You've got to do a little bit at a time. And when you go through a bad period, you've got to just put your things together and get up, because it'll eventually come to you. I mean, I believe me, I've been doing this for a long time, and it's taken me 5-6 years to train someone to do this, but when they do get it, they get it pretty right. But you've got to find out, two things. You remember the book, The Art of War? It's on the what's his name? Oh dear, Bobby Knight had it on his desk, and Norman Schwarzkopf had it on his desk. Sun Tzu, The Art of War. And in that book, it says, if you know your enemy, you are very powerful. If you know yourself, you are omnipotent. That's my paraphrase of it, but that's what it is. And if you can understand yourself, you're the one that has to understand, what you're really looking at here. So, 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other Tigers and Tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we posted a chart here of from John Murphy's post at stocksandcharts.com. Basically, what he's showing here, that the 382 retracement has been hit. We've talked about that several times here about that, and you notice we backed off since that time. If we do get above that, that would be above 2,600 in the S&P. That would certainly suggest that you're going to have a move possibly all the way back to 2950, and maybe if the trading gods are for the bulls, they might even make new highs. Who knows? But all I know is that right now it still looks bearish, and until we see that happen, we'll have to wait and see. Bob's got a comment here about corn. The problem with corn is there's so much lack of buying, Bob, that there's just nothing out. Nobody has any reason to buy. And Rich was going to come on today and talk to us about that, but he got tied up a little bit. But the problem is there's just no buying coming on. I posted that pig chart earlier. Look at the CRB index, folks. Let's just take a quick look at this. If you'll notice that CRB index, we had that beautiful 3 drive to a bottom there. Look at that, how beautiful it is. December, April and August, just absolutely perfect. And then boom, we rally up to a 78% level in early January. And of course, you can see when the virus started coming in, and it just evaporated. Now the farmers are actually holding their own. They're in good shape. Bob's question was about July corn. Bob, I've tried July corn twice now for a couple of really small losses. I'm looking for a place to buy it again, but it's gone through all my major support down here in in July corn. So I would suggest that you're going to see what's going to go happen. And, and that's part of it with ethanol too. Ethanol is a big problem. So we'll see that, we'll watch that very, very closely. But that's what's really looking, I haven't checked it this morning yet, but one of the commodities that was actually looking relatively good last week, that was the natural gas contract. We'll get this up here so you folks can take a quick look at it. And you'll see here that we went down. We made a double bottom there between the 23rd of April and the 2nd of April. So let's make the 23rd of March to the 2nd of April. So that should be a pretty good bottom in the natural gas, if that's going to be the case. The question about the crude oil, folks, believe me, the crude oil is as much of a political game as you're going to play out there. Believe me, they do everything that they can to manipulate the price of oil. They always have, and they always will. So you've got to be ready for it. If you remember a few times over the past week or so, I said I was amazed that oil could stay above $20 a barrel, given the fact that the news was so bearish. Well, what they're doing now is, they're gerrymandering, or whatever you want to call it, to find out how they can keep the price of oil at a price where they're not going to go tapioca. But some of these small firms in Texas and in Oklahoma and stuff like that, they're just not going to make it because they're very, very heavily leveraged. So we'll see how much that happens. But anyway, the good news, if we have any this week, is the fact that the death rate in New York City, which has been the worst hotspot, they actually declined, which was something, because it looked like, and it still might, it still could pop up. Also on the coronavirus, Jim's brother, I don't think is going to make it, folks. He went into another coma yesterday, and it doesn't appear that he has much time left. They gave him the last rites, so he's only 68 years old and had a lot to look forward to, but he's really going to struggle to see if he makes it. They've given him everything except I don't know. They give him every possible drug you can, so we'll see what's going to happen. But as soon as I hear anything, I'll let you know. But he's in a coma. He doesn't know what's going on right now. So that's it. If you have any questions, folks, it's 877-927-6684. Wanted to take a look here. The same thing you see is going on here in the cattle. And the part of this, folks, is the big part of the meat complex is because of the restaurants. You got restaurants, or they cut way back, and they're all, almost all the restaurants here in Tucson are only carry out, and there's not one restaurant that's open. We had a bar here in Tucson that was open for happy hour, believe it or not, and they shut that down in a hurry. But that's I guess happy hour is more important than eating. But that's the problem, is the restaurants are they're not buying, and that's a big thing. You stop and think of all the institutions, the schools and hospitals and everybody. Well, hospitals still are buying, but the schools are not buying, and so makes it hard. So we'll see that. Rocco's is only for carryout. They're a wonderful pizza place. Very good, Marshall. Marshall, you have good taste. I have to come. Marshall, they're even Guadalajara. They're having a carryout, and you can carry out a margarita, but only one per meal. So I haven't tried it yet, but maybe one of these days soon I probably will, if the cabin fever gets any worse. Here's an interesting chart here. I wanted to cover one other thing. Just bring this corn up to you to show you what it looks like here. It just doesn't really have a bottom here. But boy, folks, when we do have a bottom, look at last May where we were. We were at $4. We went from $4 to $4.80 in a month. So we're going to get one of those. And what we're going to do is find out, where the best possible place to look at it from again, and keep our, the good part about being a trader is you don't have to be a long-term farmer. You don't have to sit there with your farm, even though you're losing, and get rid of that farm, on the open the next day or sometime during the trading day. So that's the good thing about it. Yeah, sales of distilled spirits are up 50%. Gee, I wonder why that is. So we'll watch and see how this is going on. I wanted to talk to you just a little bit about the euro, folks, because I believe that the euro is going to be heading down to lower prices. And let's see, all I've got to do is to find the euro. Here it is. Give me a second, and we will get up in here. Here's what we're looking at in the euro on a longer term period, because if you think how bad we could be, you can imagine how bad Europe could be. We're trading below 108 right now. Anything below 106 is going to set up 94, 95 in the euro. And that, look at the big one going back from 2014, that big ABCD comes in down there at 95. And we've always said, you know, ever since we were back here during 2015 and 2016, that the euro's most probably sometime in the future, in the next couple of years, is going to trade below par. And, you know, that's it. The first part of that was when Brexit came in and they got rid of that. Another one to watch, folks, is to watch the British pound, because if the British pound is going to be any good, and you'll see where it is right now. We've had a really nice rally here this morning because of the recovery of Boris Johnson. But if he doesn't recover, or if he starts to get worse, you're going to see that pound, you know, sell off quite a bit. So that's something that also is in the history of looking at these things. So let's we'll be watching that one closely also. So let's take a break here. The market's getting ready to open. 877-927-6648. Yeah.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have a caller on the line. Rich Anderson, are you there?
You bet. Good morning, Larry.
Good morning, Rich. We have several questions for you. The first one is, A, are the hogs ever going to bottom? Second question, B, is cattle going to bottom? And C, is corn going to bottom? So you want to start there?
Well, actually, I'll start with the hogs. You know, I mean, what's happening is the USDA said they're going to keep the kill plants running, right? But you know, workers aren't going to go to work if there's too many people sick. You know, Grand Island, Nebraska, I heard they had 10 positive cases. That's a big cattle plant. There's not enough kill capacity. Take pork bellies. That's bacon to anybody that hasn't ever traded them. 80% of that is used in institutional business. Bellies last year were $1.52. Right now they're 32 cents.
Wow.
The cutout on hogs is 57.37. The futures price, that's a lean price, you know, so 50 cents, you multiply that times 72, and that's the actual price that the producer's getting. I mean, literally, they need to stop these pigs from having sex because we got to reduce production. But in order to reduce production, they got to sell off some of the breeding herd, and there's no packing plants that have the capacity to take them. It's a double-edged sword. The cattle opened so much lower this morning because of that Grand Island time, which is a pretty big cattle plant, having 10 positive cases, and it's hard to get workers to go into a plant that's, you know, not safe. And you can't blame them. So we've got a real problem. The problem by the way, in the grains and corn, there's a crop report on April 9th. That's probably going to reduce the consumption because ethanol has fallen off a cliff, just as crude oil has. And yet the farmers are going to plant corn. The projection is 97 million acres. We'll see if they do that or not. But they've got insurance, you know, at 388. Well, usually you get 70% revenue and protection, so 70% of 388, they still, you know, break even or make a little bit of money, mostly probably break even. There's no weather problems. It looks like we'll get started planting early. The only place where there's weather problems is in wheat in the Black Sea in Russia. That's why the wheat's held relatively firm. I mean, you see it's up today. And then in China, in the south of the Yangtze River, I mean, they've had from 20 to 34 inches in some areas, and that's, believe me, last year we only got 30% of our crop planted because we had too much rain. That's too much rain in any country. North of the Yangtze, they've had plenty of rain, 8 to 20 inches. But it's the southern area that's really where the rice and the grain production. We're going to have to work this stuff off. I mean, look at corn. You got cattle feeding margins at negatives, hog feeding margins at negatives. The chickens are reducing quickly, so that takes out the feed demand, and ethanol just disappeared. It's pretty ugly out there. You want to be watching for some signs that we return to normal. This morning, Jamie Dimon of J.P. Morgan said that this could be worse than 08, 09 as far as the economy goes, and that they may even have to withdraw their dividend. I mean, you know, he's a pretty smart guy. I actually had the pleasure of meeting him once down in Acapulco, and I respect his opinion. Yet the market's up today. They're hoping that we can find a treatment or a vaccine, and that's what we need. Otherwise, I might not be going to a restaurant for another year or two.
Yeah, boy, isn't that the truth? Rich, what about the wheat market? How does that, that's been stronger than most of the markets. What's the reasoning behind that?
Well, we planted the least number of acres since, I think, the 1950s. and now we have a crop problem in the Black Sea region of Russia. And Egypt's talking about increasing their supplies by 2 months. They've got a 4-month supply. They want to increase it another 2 months because everybody's afraid that, just as the packing plants shut down because you can't get the workers, all of a sudden, you can't get the workers. I mean, China had a problem a month or two ago when all the containers got backed up at the ports. You need the workers to move the containers. You need the workers to move the ships, and it's a problem.
Wow. Rich, I heard a comment on Bloomberg over the weekend that giving away $2.2 trillion, if you took a $1,000 bill, Grover Cleveland, put it on a piece of paper and stacked it up, do you know how high it would be for $2 trillion? 126 miles.
Wow. And they're going to plan another one of these. And the budget deficit grows when unemployment grows, and unemployment's growing like we've never seen it before, because the states, the federal government have less revenues, and they're paying out more in unemployment. So at some point, this will be a tipping point, and you'll see a weaker dollar, and you'll see higher interest rates. Jeff Gundlach mentioned that a week ago, and he's as smart as bond guys I know. But right now, there's still a demand for dollars in the world because we're the best house on an ugly street, and that's afforded us the luxury of borrowing at a very cheap interest rate. But that too will turn. That won't last forever. And and then the last thing is, the oil meeting was going to come today, and it's been pushed back to Thursday. Well, the 10 million barrel a day figure, I don't know where they're coming up with that, because Russia, maybe it'd go 1 million, 1.5 million barrels. The Saudis would probably go pull back the 2 million that they increased, and they do another 1.5 million and call that 3.5 million. But that still leaves another 5 million. The shale companies are, have a liquidity crunch like crazy, which is going to turn into a solvency crunch. I mean, you had Whiting Petroleum a week ago, and they're a great company filing. And that's going to happen in industry after industry. The airlines, I mean, look at Buffett sold out of the airlines. He knows they're worth nothing because there's no money. I mean, I talked to a friend who's relative as a stewardess, and they're only flying about 10% of the flights now, and there were 3 people on a plane that holds 160.
Wow, it sounds like it was in 2001. Yeah. Wow. This is
so think of it as the companies are unemployed too. It's a mess.
Yeah, that's for sure. Wow. Well, Rich, what are you doing during the days of spending your time? Just you and Lisa just trading the markets, and then you're staying at home all the time now. Is that correct?
Yeah, staying at home all the time. I mean, they really stressed shelter in place this week. That we're actually, as a nation, we're doing a little better if you look at some of the numbers than what they'd anticipated. But I do a little day trading because there's wild swings in these markets. There's 3 or 4 trends a day in just cattle or hogs.
Yeah.
I mean, you just have to short-term trade them and put your stops in, trade less. And the other thing, I'm just trying to read and learn.
Yeah,
that's what I'm doing.
Living the dream. Hey, listen, thanks for joining us today, my friend. Tell Lisa I said hello, and we'll have you back on real soon. Rich Anderson, folks. Okay, we'll take a quick look here at these. Well, we've got a break coming up here pretty soon, and we'll be looking at. We've already had a 200-point swing and 300-point swing in the Dow Jones in the first few minutes. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
You know, folks, when someone asked me about how did I bounce back from, the bad things that have happened to me in this business, both of them, and the second one was real easy because I had no control over it. That was the Drexel bankruptcy. But in '74, it was October of '74 that I had went to a negative balance, and at those days, there was no CFTC, there was no what do you call it? Commodity research. The CTA? There was no CTA. There was no NFA. All the members decided what the margins were, and so if you had a member that you could trade in a debit balance without doing that. If you remember the story about Rick Barnes, he had a debit balance, and he basically came into the soybean pit and just started bidding for beans when he had no money in his account. He just started bidding for beans, and of course the market turned, and he just happened to be at the right time. It was the actual bottom in the soybean market, and he turned into a billionaire, after that. But that was back in the old days. They don't do that now. But in '74, I was in Santa Barbara, California. We were having a meeting at Lilly. I was getting ready to quit. It took another year, it took me one more year to quit. But this was October of '74, and we were at the Biltmore. I think it's a Ritz-Carlton now. It's right on the water there, and I was sitting there contemplating. I was in good shape. I was young, and I had a house, and I was all right. But I was a little disappointed. But I was not discouraged. I was just disappointed was the word. And so the first thing I did when I got back that weekend, I called back to Indiana, and I talked to Dr. Noblet, and I asked him, and he laughed at me. He said, "You think this has never happened to anybody else?" And so he told me, he said, "Just study. And I said, "Study." He said, "What should I study?" And he said, "Well, of course, reminiscences of a stock operator." But then I had the Investment Center book bookstore over there. So I went over there, and Don Mack had given me the Gartley book in 1970, but it was a 3-ring binder book, 450 some pages, and I never really opened it because I didn't need it. Well, I had the Golden Touch. Why would I listen to somebody that wrote a book? So I started studying that book and a lot of other books, of course, and a lot of books on the psychology, which there were very few. They were just regular psychology books, nothing like what we have available today. There was nothing in the psychology of the markets, but, I was hanging around guys like Dave Nelson, and Oscar McClure and Jim Sibbett, Earl Hannity. I mean, all these guys had been through this stuff, and so they gave me stuff to read, and so I started to do that. And then, and all I did was I didn't do any trading at all. In fact, I only went to the office, in that county office, maybe twice a week as opposed to every day. But I would go over to the investment center bookstore and just look at the old technical books, and Don had everything there, so I was able. And then I started to see the patterns. I love the ABCD, and I really started to get a handle on that. And then in '74, Larry Williams and Charles Lindsay came out with the Trident method, which was nothing more than the ABCD pattern, and they sold that to 1,200 people at $5,000 a piece. And Lindsay was my neighbor. He had been a teacher at USC, and then he retired after doing the Trident thing, and after that he retired to become a preacher. And but anyway, that happened, and then by the time the end of 1975 was rolling around, about a year later, I was starting to get antsy again to get back in, and so Oscar McClure and Dave Nelson sat down with me and showed me the fundamentals of the soybean market, which I had about as much interest in as the Wall Street Journal on the bottom of a pigeon's cage. And but I listened to what they had to say, but what I could see was an absolute beautiful Gartley pattern forming. And then so I said, look at this. And I said, well, if you're going to do this, he said, put these oil spreads on, go long July oil, sell December oil, because it was a full carrying charges. You couldn't lose on the trade unless the insurance on it went up, and that wasn't going to happen. So you could buy a spread for, I think it was about $90. In other words, you can control about $6,000 worth of soybean oil for $90 in that spread. So I put the spread on, and it looked so good, I had everybody that would listen to me put it on. I had my sister, everybody that would listen to me. She was the only one who could listen to me, as a matter of fact. There was a few others. Anyway, a bunch of people did it, and the spread started to go, and then things changed for me. It's sometime in the spring of '76, early spring, February, somewhere around in there. The spread was trading at about we'd moved out about doubled in price, so the spread was trading for about $1.80. So at that point, you'd made a few $100, $500, but on a small investment, that's quite a bit. And on that day, at the end of the day, the July oil jumped way up 30 points, which was $180, and the December dropped $180. So it was a $360 swing in one day on a $90 investment. And it caught the people by surprise, and it came across the Reuters machine, big discrepancy in soybean oil. This is going to be corrected Monday morning, and had all this money. And I said, oh, gee, what do I do next? And then Monday morning opens up, and they open unchanged. And at the end of the day, soybean goes up 30 into July, down 30 into D. So it did that for 18 days. And then July took off on its own, and then the rest was easy. And then in August of it was around July. It was a July report that I cleaned everything out and took a month off. And then Drexel came to me and said, how about coming to work for us? And after that, it was pretty easy. So we'll see how it happens. But anyway, you just got to keep going. Just like Churchill says, never, never, never give up, folks. Don't do it. That's just no question. Now, right now, I spend. I'm like Rich. I'm looking at the intraday swings because they're so darn big that you don't have to risk very much. Right now, as we speak, right now I'm looking to. I just shorted the gold market at 1675, and I put my my stop at 1680. I don't even know if I'm still in it or not. I don't care. But I was long coming in, so we'll see what happens. But right now I'm net short. That's the 78% level, and I believe that it's got a chance, given the pattern that we're looking at, that it may or may not work. I wouldn't do that if I were you. Follow me, but that's what we're paying close attention to. Also, let's take a quick look here about this oil market. I think it's very important, folks, to realize what's happened to oil here, because it's at 81. Then if it's at 83, I'm gone. Yep, I am gone. Hold on here a second here. Yeah, I'm out of that one. Thank you. He wants me to post the AI. Oh, I don't want to do that, but I will. Should I do that? Yeah, here it is. See if this works. I don't know. Here, get this up here to take a quick look at it, and you'll be able to see it. Okay, that's it. Yep, I'm out of the gold. That was a quick $3. All right, let's move on to the next one here. That's for sure. Yeah. Okay. The E-mini looks exactly like the Dow Jones. The Dow Jones or the E-mini. What's interesting here is that this morning, the Dow Jones went up and touched that same high from last night after dropping 300 points. So that's a real strong resistance up there at 21,900 in the Dow E-mini. So watch it very, very closely. That's a really, really interesting one to look at. So that's what we're paying attention to. So it's going to be very, very interesting. No question about it. We'll be right back. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers along with weekend and evening updates when warranted. The opening call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the opening call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're having an explosive move to the upside. The Dow just moved another 300 points straight up. So maybe it'll pull some of these commodities off the bottom. We'll see if they take a look at that, and we'll see if that happens. We'll watch one thing at a time. One of the questions that someone's asked me was about things like palladium, folks. I don't trade palladium. The spreads on that they're too wild, and the margin is just, well, there's no liquidity there at all. So that's the main thing that I'm, watching as I look at some of these things through here. Another question someone asked me about what the Fed is doing. Folks, that's so far over my pay grade, I can't even possibly imagine what it's like, because of the fact that we're looking at something that is so ridiculous as a 126-mile high stack of $1,000 bills. Are you kidding me? That's a lot of money. Holy cow! I remember the $1,000 bill, because in 1989, when the Nikkei was near 40,000, they put a $1,000 bill. CNBC did right in front of the Imperial Palace. There's a picture of Grover Cleveland, and it basically said, "This is how much real estate you can buy for $1,000." That was 1989, folks. So it was a pretty wild thing. So that's what we're paying attention to now. We are going to have another guest. We're going to have Bill Meridian, I believe, on this week, because he's pretty much captive there in New Jersey or Long Island, wherever he is, and I think he'll be able to come on. And we're also going to try to have Stan Harley on again this week, given the volatility that we're having on some of these things. So we'll sort of pay attention to these as we look at them through here. So that's pretty much it. Remember, folks, you got to use stops in these markets, because the Fed's out there and they can do anything at any time, and they usually do. So be very, very careful as you walk through these pitfalls of trading that they've laid out with the Fed doing all the stuff they're doing, and nobody knows what's going to happen to it. So we'll see. Someone's asked a question: is the Fed have? Of course, Fed has positions. They have positions in just a lot of different things. That's how they make markets in them. 877-927-6648.